Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I'm going to talk about house prices have just hit record highs. It's been a while since we've hit a peak, in fact, a few years. So I'm going to tell you in this video how much house prices have now peaked at and what can we expect in 2025, because we've got some new data on that. So if you're new around this channel and you haven't been watching before, do subscribe to the channel over there and hit the bell notification. We're on the way to 33,000 subscribers now, which is crazy. And we talk about house prices, mortgage rates, property investment, and much, much more. So that's a reason to subscribe. And while you're here, let's do a favour to the channel and get this video more views by smashing like, tickling like, doing something to that like button. That really helps with the YouTube algorithm and helps the channel grow. So I appreciate everybody that does that. So we've got some new housing data today. This is Halifax's data. And they're saying that house prices have peaked. And it's been a while. House prices have been fairly flat the last couple of years, but they've now got back up to good levels. And that is mostly off the fact that interest rates have fallen. Mortgage rates have fallen, not the Bank of England rate. Yes, that's gone down twice, but that doesn't really make your mortgage payments cheaper. It's the mortgage rate that you get. That's what you really care about. What are your monthly payments? And so back in December last year, rates weren't moving particularly high. The market started to slow down. I spoke to my solicitor today. He said 2023 was a brutal year. And so as the new year started, mortgage rates started to be cut. So as they were cut at that stage, then what we had was a gradual decline in mortgage rates over a few months. And that worked until the spring. And at that stage, the mortgage companies paused and they started to increase a little bit. Then they saw business went really quiet again, and they were looking at it probably thinking, we don't want a year like 2023 where there isn't lots of transactions, because transactions mean more fees and more business for them. So in the summer of this year, as inflation started to drop, they could see the Bank of England was eventually going to cut rates, and they decided to cut mortgage rates as well. So a little price war broke out, and that really is what stimulated the market again. We've had more buyers into the market. We've had more sellers into the market. We've now had 2 Bank of England cuts, and that has made a big difference. So what was the original peak? So the original peak was in 2022, in the summer of 2022, and that was £293,507. That was the peak. So what's the new peak? The new peak is slightly above that. So this is the new peak, and this is for October. And this is £293,999. So around about £500 higher than the original peak, which is good. Now, in real terms, if you look at the price between 22 and now, prices are down if you take into account for inflation. Those pounds are worth less than they were in 2022. That has improved affordability for people because people have had pay rises, mortgage rates have come down, and all of that stuff has been really, really good. So how much have these gone up in October? So in October, house prices are down 0.2%. They're down 0.2%, and that, totally wrong, up 0.2%, not down. They're up 0.2%, and that's the 4th consecutive month now that house prices have risen. And the year-on-year stuff isn't as good, so it's slowing down. We talked about this in the nationwide data. They had house prices up as well, but at a less faster pace. So we've got to keep an eye on that kind of stuff. So just because the house prices go up, if it's slowing down, that's something to keep an eye on as well. That's what we might see happening next year. So the year-on-year house price increase is 3.9% now. It was 4.6%, just so you've got that reference there. So it is slowing down, and that is normal. And what will happen is I think it will start to speed up a little bit between now and March. So I think that you're not going to see many drops. I think you see some fairly decent house price data, and that's because stamp duty is lower at the moment. It's gone up for buy-to-lets, but for residential properties, it's lower till the end of March. And so people will be wanting to get those transactions complete in order to save on stamp duty. So you always see that when we had a stamp duty holiday in the pandemic, there were lots of transactions that got done prior to that deadline. That's what we're going to see here. Now, here's an interesting little stat that they talked about here. And that's the fact that they believe, Halifax believe, house prices are going to have a really good year in 2025. They believe in 2025, house prices will go up 5%. Now, why is that? Well, they believe mortgage rates are going to be fairly stable till about March. We've been saying similar stuff on this channel because the swap rates are higher. So Labour's budget wasn't particularly, hasn't gone down particularly well with the markets. The swap rate has gone up. Mortgage rates have gone up as well for some lenders. We've seen a few lenders that put their prices up. TSB, Halifax was also one of those. NatWest put some prices up as well. And that's going to happen until around about March. That's what most people expect. Then after March, a lot of people feel the mortgage rates, the Bank of England's going to keep dropping rates. The swap rates will start to drop. And the market will slow down at that point. The market probably will slow down after the stamp duty holiday. So mortgage companies in that scenario will want to drop rates in order to get more business, and that will stimulate the market again, and house prices are expected to go up 5% in 2025. That could very realistically happen if you do get people getting pay rises. Remember, people have had pay rises and they've had pay rises above inflation, and the payments are getting cheaper. It just means affordability is better, and we still don't have enough houses. So we will still have a fairly buoyant market. So interesting, this data. I do like the Halifax data and the nationwide data because they do have a crystal ball that you don't and I don't. And the reason for that is they know all the applications that they've got this week. They know the surveyors that are surveying those properties. Some of them will be working with them. They know the decisions in principle that they've got on their plate right now. They know the lending that's going to happen between now and March already. So that's the first quarter of next year. They already know what's going to happen there, right? And so they do have a kind of crystal ball. They will know ahead of time, before anybody else, if the market is going to crash. Another thing to look at would be asking prices, but these guys know the actual deals that have been approved and are going ahead and at what price. So it is interesting to listen to their take on it. 5% they're saying up, and they're saying a smidge up, but a new record high. That's interesting. Let me know your thoughts, questions and opinions in the comments below. Do smash like, do share the video, do check out all the other content on my channel, including this video right here.